Welcome to this week's Cattle Call. I'm Susan Littlefield on the Rural Radio Network as we broadcast from Commodity Classic that's taking place in Houston, Texas. And as you can see on the screen, that's not Brad Kooima, but it is Joe Kooima, as Brad is actually on vacation this week. So we appreciate Joe stepping in to fill in for this week's program. We're going to take a look at what's happening on the cash. I know that we don't usually like to talk about the end of month feel on this, and that's what we're going to have to do a little bit of because we're wrapping up the month of February, ready to hit March. So what is spring numbers? How are those going to look? Are we putting some highs in? Are we going to set the tone for the markets? We've got a lot to look at today. And as I mentioned, it is Joe Kooima. He's with Kooima Varlick out of Sioux Center, Iowa. So let's start with the exciting thing. We're starting to see some cash news pick up as you and I record this midweek. Nothing we've seen in the last couple of weeks where Wednesday we're out there looking for cattle.
Right. Thanks for having me on this afternoon to fill in. You're right. Yeah. Middle of the week, getting some cash to start. 182 bids were here or down south this morning. And the last half hour, 45 minutes, we started seeing some 183 show up there, trading a few cattle down there in the south at 183 in Texas and in Kansas. And remember last week, it took all the way up until Friday in the last about hour of trade. And then all of a sudden it was good old fashioned bidding war. The low bid started at 78 and worked itself all the way up to 83 to 84. So to have that midweek right now does feel pretty good. The futures acted a little bit wonky today. Yesterday we got to the top end of the range, the high end of the range anyway, about $3 worth the last week and a half. So we've been inside that range. And yesterday we got to the tip top of it. Couldn't quite muster a close on the high end. We gave a little bit back, and then today, end of the month type stuff going on. We got one extra day in February this year, so we're going to have to probably deal with it again tomorrow. But I think this morning we started off with that feel of end of the month, midweek slump here with really no cash news to start in the morning. And we just had all day to kind of suffer with that a little bit. And maybe the cash came in a little bit too late today to kind of save it. But that's how I'm kind of dealing with today for the most part. I'm not the guy that always likes to have a reason about end of the month stuff, but the funds have a portfolio that is set up in such manner. We've witnessed a 3-day rally in the grain positions, and they're record short for both the soybeans and the corn. So they're buying some of that back to give their end of the month numbers look good, and I think they're kind of doing the same thing in the cattle. They're just taking some off since we failed to break out yesterday is how I look at it right now.
So talk about this corn, because obviously a major component in cost for our feedlots. This last week or so has made for some interesting marketing opportunities. And I know I talked to a lot of cattle guys that said, hey, we were locking in some feed costs in this last week. Is that something that you guys have been talking to your cattle guys about?
A touch, yeah. So especially, the first couple months of this year, it didn't feel quite necessarily right to worry about cash corn too much. The basis was really falling apart all across the country. But now we're starting to get within shouting distance of, all right, what's this year's corn acres going to be? Are we in for another drought? It's certainly dry in certain parts of the area. So now that we're getting closer to some of the seasonal stuff, I would recommend probably doing that. Even if you look at the corn options, the call options, they've really bled a lot of value out. And a lot of times, the market does sense that, and the market can go sideways when you see a lot cheaper call options there. But having some stuff here for the next, 2 months worth or 3 months worth, just to check that box off and don't have to worry about, what the funds are going to do with a record short position and it turns hot and dry. Yeah, there could be some fireworks there, but maybe just lay that to rest and find a call option that's 15 to 20 cents. $5 corn isn't going to hurt a guy anymore, so maybe we can look to lock that in for this year too, if a guy's really looking to lock in feed nets.
So as you and I are talking, there are fires that are still being fought in parts of Nebraska, in parts of Texas. And I know that there has been a lot of concerns about potential cattle loss in an industry that has already been, gut punched more than once. Has the market even looked at that information that's coming across? We don't know any numbers as of yet, but is it something that they're kind of keeping in the back of their minds?
Certainly in the back of their minds, and you're right. It is tough to find any kind of set numbers of what that's going to be, especially since we're up here in the north. We don't have a whole lot of what's going on in the south there at all, but certainly heartfelt losses down there. I just don't know, by the time if we do get a set of numbers, is it going to be a month afterwards anyway, and then maybe the market has already cycled through some of that data.
All right, box beef numbers. We saw Wednesday bring some higher numbers. Is that going to be a trend for the rest of the week?
I think the last little while here, we found some numbers where the boxes still move. Locally around here, we had some brisket that was $2.99 a pound. Some ribeye loins and some New York strip loins are below $11 a pound. So we're certainly at price levels where it can move. And are we going into some tighter numbers? Absolutely. Packers have cut kills because of that. They're offering some basis contracts above the marketplace because they're trying to get some cattle around them, so they know that they can probably test the market out a little bit higher, and it still can move. If you're short a product, you're going to bump up the price necessarily. So I think that's a function that we're going to be in here moving forward yet.
All right, lots of things we looked at. Spring highs. What is your thoughts?
You look at some seasonal books, and yep, it is kind of right here right now. And even you look at the fourth quarter lows, and the last 20 years, you put in a fourth quarter low, you can have a market return back 15%, and that's actually about $1.90 for the April fat cattle. And we've gotten awfully close the last few days there. So there are some historic stuff, some seasonal data that would suggest that. And I'm not saying that's the case at all. If you just followed seasonals, you'd have a pretty rough path, right? And especially this year and the last few years that we've built up to this price level too. You're looking at the cow herd that's the smallest ever, so that has to weigh into a guy's factor or gal's factor, as well as what we should do for marketing here. But yeah, when you have days like today where it's down hard, you're looking back at the seasonals and saying, oh boy, here we go. But that's not always going to be the case, but let's keep it in the back of our mind too. We got high prices here. We might have to look at some protection here. Just too many dollars at stake.
All right, great conversation today, Joe. What's the best way for folks to get a hold of you guys there at the office?
They can give us a call here, 1-800-358-3047, or go to our website as well, KKV Trading.
All right, that has been this week's Cattle Call. Just a quick reminder, commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that's the Cattle Call on the Rural Radio Network.